No government is going to voluntarily give up control over money. If Bitcoin becomes money where people are actually transacting in it rather than just holding it as an investment, the sooner the regulatory boot will come down.
The government will never allow Bitcoin to become money. This is probably the most common concern I hear from new people when it comes to the long-term success of Bitcoin. Today, I dive into the current regulatory and political landscape for Bitcoin and why nation-states are much more likely to start stacking Bitcoin themselves than banning it and criminalizing its use. Could Bitcoin be used to ease nation-state debt burdens? Will ignoring it become a threat to national security? What's up everyone, I'm Hurley, Director of Content here at Swan. Let's get into it. The Bitcoin price is down again today as it looks to retest 3-month lows just under 54K. If you've been around the Bitcoin space for a while now, you know that this is a buying opportunity, as all dips are. And you can buy the dip through financial services like Swan. Visit swan.com or download the app at swan.com/app and sign up and start buying the dip in minutes. You will also get your first $10,000 in Bitcoin buys with 0 fees. Okay, so in today's video, I want to address some common top-of-funnel FUD that we often get from new people to Bitcoin. And I'll even admit this was one that took me a while to wrap my head around when I was new to the space in 2020, but I am surprised that it's still so prevalent in 2024. We'll get into why in a second. First, let's take a look at this clip from Natalie Brunell's podcast, where she's asking macro analyst Steph Pomboy about her thoughts on Bitcoin.
My real reservation around it has been that no government is going to voluntarily give up control over money. So if and when Bitcoin or whichever currency, cryptocurrency emerges as the winner, I presume everyone in the space is just, waiting for one to emerge as the cryptocurrency. I don't know, but this would be my sense, is that there has to be one or two, let's say. And at that point, if it becomes money where people are actually transacting in it rather than just holding it as an investment, regulators are going to really come in, and that regulatory boot will come down and eliminate several of the things that I think Bitcoiners, from my understanding, view as the part of the allure, like the anonymity of having Bitcoin, letting it, having it be off the grid, let's say, away from the long arm of the government. I just don't see that is sustainable if Bitcoin or the other currencies become really where everyone hopes that they go eventually, if they become big enough and transacted enough. In a way, I've always said that their success sows the seeds of their failure, and maybe failure isn't the word, but the more they succeed at what they're hoping to do, the sooner the regulatory boot will come down. So that's sort of been my central hesitation about it.
So first things first, let me just quickly dispel the notion that we're still waiting for a single cryptocurrency to emerge as the winner. The market has clearly already chosen the winner, and it's Bitcoin. Now, I don't need to get into the specifics of why here, as it's obvious to anyone that's looked into it for more than a couple hours that nothing can catch the network effects and adoption of Bitcoin, specifically as its use case of money, which is the problem that Bitcoin was originally designed to solve. But I digress. The main point of contention that Pomboy brings up here is one that I'm actually surprised is still so prevalent in 2024, and that's that the government simply will not allow a money to take hold that exists outside of their authority. If you've been paying attention to Bitcoin at all in the past year or so, you can see that governments, regulators, and policymakers are warming up to Bitcoin at an alarming rate. First, we have the SEC's approval and subsequent launch of the spot Bitcoin ETFs earlier this year, which have been a huge success, smashing previous ETF inflow records across the board. We have institutional interest at an all-time high. We also have prominent US presidential candidates showing support for Bitcoin in the US, as well as the rights of citizens to buy, hold, and transact in it. We even have broad bipartisan support for legislation like the FIT21 bill that passed in the House of Representatives in the spring. The bill provides exactly the kind of regulatory clarity and support for innovation that Pomboy seems so concerned about. But what's much more compelling to me is the game theory playing out before our eyes, and the possibility and even probability that we see sovereign nations following in the footsteps of El Salvador and stacking Bitcoin as a strategic reserve asset. And as Marathon CEO Fred Thiel lays out in this clip from Robert Breedlove's podcast, a Bitcoin strategy even has the bonus potential of easing the massive debt burdens of these nation states.
The U.S. needs to fund its debt somehow. And if people aren't buying dollars or putting things in dollars, that is a precarious situation. So that leaves the U.S. with only a couple of alternatives. They either have to let the dollar drop in value significantly and have high inflation so they can inflate away the debt, but that would be disastrous. The other thing they can do is they can invest in an asset like Bitcoin, which will over time appreciate in value. And if it can appreciate at a rate faster than the U.S. total debt appreciates, then now you have something you can use to offset the debt over time. And if the U.S. were to hold 2 million Bitcoin, and that Bitcoin goes to $20 million over 10, 20, 30 years, then now all of a sudden the U.S. would be holding at $20 million, roughly 40 trillion plus. Well, the federal debt today is 35 trillion and growing. And there's no way the government can service that debt at current inflation levels, interest rate levels.
Yeah.
Right? And so the minute the U.S. does it, they will now have the ability to project power in the Bitcoin market because they will have pricing power because of their supply, just like they do with the Strategic Petroleum Reserve. Why does the administration sell oil out of the Strategic Petroleum Reserve? To drop the price of gasoline, to lower inflation. Right? Why does the Strategic Petroleum Reserve exist? Well, it was to protect us from price shocks in the outside market. Well, today the U.S. is arguably the largest oil producer in the world. And so they have the ability to not suffer the consequences of high international oil prices in the same way. But if the U.S. does it, then everybody else is going to have to do it, because you can't be a country and not have a strategic reserve of Bitcoin if all the other countries have it.
Right.
And countries like Russia, China, and others look at Bitcoin as a neutral currency that isn't controlled by a government or a country, that allows them to trade independent of any sanctions the U.S. would ever do. And so if the U.S. wants to keep them from trading in violation of sanctions, they have to also have enough Bitcoin so they can impact that market. And so it becomes an issue of national security, which has nothing to do with cybersecurity or anything like that. And when President Trump talks about we should have all Bitcoin mining in the U.S., part of that is a thinking that if you have Bitcoin mining in the U.S., then you have the ability to determine what transactions get processed, which is why every single sovereign who wants to hold Bitcoin is going to want to have mining in their country, and which is why they're all going to want to operate their own mining pools so that you can't essentially, through sanctions, OFAC, et cetera, control their ability to transact in Bitcoin. So the implications of Bitcoin becoming a sovereign reserve asset are that every country in the world who wants to hold Bitcoin should have Bitcoin mining in it, which will lead to a huge decentralization of Bitcoin mining. Right? And that will force Bitcoin miners to have to become super efficient at what they do.
What Fred Thiel lays out here is a world where nation states are forced to adopt a Bitcoin strategy as a matter of national security. This is the beauty of Bitcoin's game theory in play, which centers around incentives and strategic competition. As Bitcoin continues to grow, nation states are forced to make a choice: either adopt, support, and benefit from it, or resist it and risk being left behind economically. In essence, Bitcoin's game theory incentivizes early adoption and punishes resistance. We can even start to see this play out in Donald Trump's early support for Bitcoin, as his stance is centered around America first and American dominance in mining, while also capitalizing and becoming global leaders in the innovation that Bitcoin provides from a technological, economic, and energy production standpoint. This is also the Trojan horse theory we've talked about playing out. All the things we've talked about today are happening, and they provide a benefit to the individuals, companies, institutions, and nations that adopt it. By the time Bitcoin becomes entrenched as a viable, open, and global store of value, it'll be too late. The horse will be inside the city gates, and the freedom technology of fixed supply, self-custody, and peer-to-peer transactions will be unleashed. So do us all a favor and share this video with the next person who tells you that governments won't allow Bitcoin to become money. It's already playing out exactly as the game theory lays out. All we need to do is sit back, continue to buy the dip, and educate others on why they need it. Let me know what you think in the comments. I'd love to hear any questions or topic ideas for future videos. Also, like this video for the algo and subscribe to the channel for more content like this. Have a great weekend, everyone, and don't forget to smash buy the dip through swan.com and spend some time with loved ones. I'm out.